And our first guest joins us via satellite from Houston, Texas. Mr. William Sawyer is the CEO of Lucas Energy. They are listed on the American Stock Exchange. LEI is their symbol. Bill, good to talk to you again.
Oh, great to talk to you, Don.
Well, Bill, we are so pleased to be reinitiating coverage of Lucas Energy. Now, I've seen substantial and sustained growth from the company over the last couple of years. But tell us again a little bit about your business model.
Business model is very simple. We haven't changed the business plan since day one when we started in 2005. Basically, we go out, we look for wells that were shut in or abandoned when oil prices were $10 a barrel. We go back and put them back on production. We look for some underlying value. If the underlying value is within our budget, we do it ourselves. If it's not, then we go out and find a partner. And that hasn't changed since day one.
Well, now, Bill, as you mentioned, a lot of these wells were capped in years past due to low prices. But does today's technology also play a part in being able to increase production from them?
It plays some, but not a whole lot. We use basically simple methodology. We go put the wells back on. There are some things we do, such as we put soapy water down old lateral wells, but not a whole lot of technology.
Well, Bill, does the company have a particular criteria that you follow when you're evaluating a project for potential acquisition?
Yes, there is. First and foremost is that we're looking for wells, as I said, that were abandoned in the 90s when oil was $10 a barrel. We're looking for wells that are not depleted. We're not low-end or marginal well people. We're looking for wells that will make us a lot of profit. We look in areas where people have overlooked. When we started out, we looked in the Austin Chalk because nobody's interested in it. Now it turned out that that's the Eagle Ford trend, and it's the hottest item around.
I would have to think that from a capital efficiency standpoint, it must be a tremendous competitive advantage that you don't have exploration costs in your overhead.
Oh, very true, Don, very true. By not having exploration, we don't have to have the geoscientists. We don't have to have the people going out and looking for acreage. And it cuts our overhead way down. It also cuts our expenses way down. Plus, it cuts our success rate goes way up because we're not doing exploration.
Again, the company is Lucas Energy. They are listed on the American Stock Exchange, symbols LEI. Bill, how many total wells does the company control right now, and how many of those wells are actually currently producing?
Gross wells, we control about 70. We have about 35 producing wells at this time, and we're adding new wells every month. We, in fact, just added a new well that we drilled called the Rainy Unit Number 1, which is a horizontal Austin Chalk well.
You know, MoneyTV started following you about two and a half years ago. It appears in 2011 that you've been added to the radar screens of some major stock analysts. I mean, that must be extremely satisfying for you.
It was a big surprise and extremely satisfying to us. C.K. Cooper picked us up, and also we found out one day that we were on Kramer's list, which kind of surprised us. But at that time, we traded, over 4 days, we traded 77 million shares, and the stock went up to $5.25. That was back in February.
Amazing. Now, you announced recently on this program that your Series C warrants had all been exercised. What does the company have planned for the proceeds?
Well, that's true. We did get all the warrants exercised before August 3rd, the deadline. And in fact, one of the surprises was that it was exercised at 20 cents above what the market price was the next day. So we were very happy about that. Our plan is pretty simple on what we want to do. We're saving back approximately $3 million for Eagle Ford wells once we learn what Hillcorp and Marathon are going to do. And then we're going to invest the rest of it in developing our Austin Chalk formation.
Well, now, oil prices in 2011 have really been all over the road, from the mid-80s to about $116 per barrel. Do those price fluctuations have much effect on Lucas Energy's operations?
Well, not as much on operations as our going forward with expansion. I would not be telling the truth if I did not say that fluctuating oil prices affect us. But we still have some oil in East Texas that sells for over $110 a barrel, and it hasn't affected us so much. Our biggest need is to improve production, our net production, and that's what we're focusing on, and that hurts us more than the oil price right now.
Well, what kind of steps can you take, Bill, to increase production?
Well, what we're doing is we're moving into the phase in which we were gaining assets, that we were putting money into buying more assets in the Eagle Ford trend. Right now what we're doing is putting more money in the ground to improving production. We just drilled one well, as I said, the Rainy. We're fixing to drill another well, the Milton Hines, add a new lateral. We have behind that another well, the Hagen 4, that we're about to drill.
Again, the stock symbol on the American Stock Exchange is LEI, Lucas Energy. Bill, why is this a good time right now for folks to take a closer look at your company?
Well, I personally believe that we're undervalued. In January of 2009, we were at 44 cents a share, and our book value was $1.60. And we showed people that we were undervalued. I think this is another time when we're undervalued. We believe, based on our internal numbers, that our Eagle Ford alone is worth about $60 to $90 million or more. And we think that we're going to try to cash out of that and get the cash in hand. And if that's true, that's about $4 a share, which is about double what we sell for now.
Lucas Energy, LEI is their symbol. Bill, we are, as I mentioned at the top of the interview, we're reinitiating coverage of the company this week. Be watching you very closely between now and the end of the year. Looking forward to some updates from you during that period of time. Again, thanks for joining us.
Thank you very much, Don. Appreciate it.